Hello friends, do you believe me if I say that there is an investment strategy which I have myself used for 7 to 10 years which can deliver you 42% returns year on year? Will you believe me if I say this is not a clickbait? Will you believe me if I say this is not a trading, this is not a speculation, this is a long term investment? Will you believe me if I say this is not a secret strategy but it's a simple math? And if you believe me, then watch this video. So hi, I am Arun Tiwari. Generally, I make video on on taxation, anti-taxation, tax litigation. I avoid making video on investment because then people take you for wrong reasons. They want something quick fix. They want to become overnight rich. They want to do trading, speculation, FNO, and I don't do any one of them because as a professional, I really don't have or don't had time for this. Now, I use this strategy, and this strategy has really helped me to achieve my goals, my financial goals to retire early. Now, I'm just starting to be in 40th year of my life, and I don't have any pressure to work. I'm retired. I'm working only for things which really help me or please me to achieve my passions. Like making video is one of them. So today I'm going to share this video with you, and I really promise you, if you spend whatever 20 or 30 minutes of your time watching this video, this can change your whole perception about long-term investment. Long-term investment is not only safe, it can be very profitable if you can just deploy what is I called mastering MTF. So let's begin. So hello friend, first of thing you have to understand what is called MTF. So MTF is called margin trade facility. Now most of you might be aware about this. This is not something new. This is already available from quite some time. But recently it has come in a lot of news because so slowly the SEBI has pulled string on FNO because lots of people who don't have qualification, who don't have money, they plumbed into FNO, they burned their finger, they lost their wealth, and we become number one of something called a speculative nation. So they stopped this. Now all of a sudden the brokers who are making a lot of money from this FNO thing, they are definitely finding it that their revenue is going to dry, and they are focusing on something which was already there but they never promoted it because they don't need it. Now they need this something called MTF, margin trade funding. So using this margin trade funding, you can really achieve something called up to 42% return. Even in worst condition, you can easily achieve 25-23% year on year growth on your long term investment. So what is this, how it is, I'm going to show you with a little bit of presentation I prepared, and also with the calculation I'm going to show. And also I have taken most of possible question which either you will throw at me or the critics, or you can say trollers, the modern critic, online critics will ask me. I will answer that, and after that also if you have question I'm ready to answer. See, understand here, my point of view is not to sell my idea, not to ask you to join any kind of courses from me. My only simple idea to share the knowledge which help me to make money, to grow my wealth, to achieve my goals, financial goals. Maybe it can help you also, so please watch from that point of view. It's not a quick fix thing. It is not get rich by overnight kind of formulas. It is not a hidden secret strategy. It's very open thing. Let's watch it. So this is the first slide. I call this mastering MTF, margin trade funding, and it's only for long-term investors. It's not a trading, it's not a speculation. You can make really up to 43%, 44% using this strategy in long-term way, without doing any FNO, without doing any intraday, without doing any speculation. Just long-term investment, you can earn this. Now first let me explain what is MTF. Most of you might be knowing, and if you know that, you can skip this part. If you don't know, just it's very simple. So what happens, suppose you want to buy a stock, say or a portfolio of say 10 stocks which worth say 50 lakhs, but in your account there is only 10 lakh available. So what you can do with 10 lakh rupees, that is 20% of total amount required, you can place the order, and 80% of the funding, that is 40 lakh, will be paid by broker. So broker will pay that amount, fund that amount. That means he will make a margin available to you. Using that margin, you can do a trade. which actually not a trade, it's a long-term investment. And this facility is called margin trade facility. So what happen in, you can hold the stock as long as you want, like 1 year, 2 year, or 5 year. Only thing you have to pay to a broker, because broker is not going to give you this for free, is interest. Now this interest rate varies from 7% to 18%. It depends broker to broker, and sometimes broker make special interest provision for special clients. So they generally have a feeling that which are clients which are capable, have good financials, good records, and they can give you a trade like a special rate for you. But generally it varies from 7% to 18%. Some cases it can go to 24% also. So this is called margin trade facility. Now let me calculate that how it generate almost 42% to 44% return. So don't go with 44%. I will explain 44% also, 42% also. It's all possible. So first thing, it's a long term. There's nothing short term. Second thing, we use leverage. Now understand simple example. We have 10 lakh rupees. We bought a portfolio of 50 lakh rupees. So basically we got a leverage of 4 times, right? Using the leverage, what happened? Like leverage is a word which originate from the word, from the instrument called lever. So you know, the using lever you can lift heavy weight also. In simple term here, the leverage means I got 4 times more exposure. For example, suppose my portfolio generated 12% return, and suppose I have to pay 10% interest to broker. So basically what happened, on every 10 lakh rupees I made, sorry, every amount which I taken as a loan from broker, I made 2% extra. So for example, if you calculate this way, you will find out that actually you make on total portfolio, you after deducting interest, you made almost 2.5 lakhs. Now if you consider this 2.5 lakh with your original capital, which was 10 lakh rupees, you made 25%. Suppose your portfolio made 15%, so you will make 43%. This is how it's going to work. I will definitely will show you the calculation also, but this simple scenario is there. A third important part here is you cannot buy any stock from that. So it's actually extra safety. You can only buy mostly large cap, well established companies. You cannot buy penny stocks from you. Good news is here you can buy ETF also, exchange traded fund. For example, you do not want to break your head selecting stocks and all. Simply you can buy Nifty 50 ETF, which is represent the Nifty, and then you can just sit on that for long term. And suppose if I just give you the background, Nifty has given almost from the starting, it has given almost 12% to 15% return. In recent period, if you see that return was very high, but even I consider a very normal thing, Nifty has delivered more than 12%. So even considering that your portfolio will deliver 12% in 5 years, I'm just talking about average return, still you make 25%, 26% year on year. Now, if you lucky, because India is in super spot, and generally people are expecting that next 10, 15 years it will deliver more than average return. I'm not talking about blockbuster and double up and if will touch 1 lakh rupees. Oh, sorry, 1 lakh points. Even it delivers above average returns, I'm saying 15%, 43%, 44% is possible. How? I will show you through the calculation also. Now, before the benefit I will show to you, let me show you the calculation part. So here we have this calculation which I have prepared. It's very simple calculation. So suppose we have an expected rate of return like every year Nifty, suppose whatever Nifty or portfolio. So here we are going to select a portfolio. We are not going to buy 50 lakh rupees, or we are going not to put all our 50 lakh rupees in one stock. That will be risk. That will be diversification risk. We can definitely select a portfolio of 10, 15 stocks, or we can even select index fund. Sorry, ETF like Nifty. Suppose we expect a return, we have selected some good stocks, maybe 10, 15 stocks, and we are expecting that over 5 year, I'm talking about 5 year. Now again, one thing I'm telling you, if you are long-term investor, nothing you should expect less than 3 years. And I always say 5 year is a more safer, more realistic term we should use. So I will also tell you some precaution you have to take when you're using this strategy. For example, you should never put a money which you require within 3 years, like for buying house or something. Always use spare money because you are going for long term. Suppose we are expecting 15% return here, for example, and suppose our loan, whatever we are expecting from broker is 10%. Now some people will ask me, sir, which broker give you 10%? Brokers are giving 14%, 24%. I will give one name, mStocks. Search on Google. There are other brokers also who are giving less than that. In mStock, if you're going for more than 5 crore of loan, they're giving 7% also. So this rate is feasible, and I'm telling you, in coming days, this rate will further fall as the RBI will reduce the interest rate. Plus, there will be more people coming in this sector, more brokers with big pockets, big deep pockets. They will enter in this area. There will be definitely the next war will be on this interest front, and we as an investor will reap that benefit. So it can go to 6% also. Don't be surprised. But for the time being, I'm taking 10% interest rate. Suppose you're paying. So suppose you bring your own capital 10 lakh rupees and you can take a loan, which is a kind of margin up to 40 lakh rupees, right? And suppose on that both you generate 15% here, 15% here. Now on your capital, the whole amount will go to you, which is 1.5 lakh rupees is your profit. On loan amount, suppose you are paying 10%, so only 5% will go to your pocket, which is 2 lakh rupees. Now, there will be a dividend also, and the complete dividend will belong to you, not to the broker. Broker will only put pledge on those stocks. So basically, legally speaking, because broker has given you loan, so for safety purpose, he will pledge the stocks, and but the ownership of stock will be you, with you. So dividend will be also with you. So you suppose 1%, you can reduce this amount also. You will put half an percent, doesn't make much difference. For safety purpose, I'm taking 1% dividend you are getting. So this is one. And then generally I do what I do, which is optional, which if you are like you are done something, I generally sell nifty options long term on the margin which is available. Like if I say the 10 lakh rupees is my capital, and on 10 lakh rupees, suppose I have another 10 lakh rupees lying in the liquid fund, I can use both that on capital and that liquid fund for some kind of margins, and on that I can just buy some long term nifty options. I sorry, not buy, I sell. Generally I'm an option seller. So this concept I will explain sometime later, but I do, it's optional. You can reduce also, this doesn't make much difference. So suppose I just reduce this part here, that it comes to 4%. But generally if I use with that, and long term means I can sell options for next year, next to next year, it's possible. And just to sit out there, mostly cases it goes into money, and you just exit when it is 80% depreciated. So yeah, always you're not in profit, but I'm just talking about 5% return yearly basis. People talk about 5% return on month on month basis, which nowhere possible. I have done all these FN like R&D. I have attended many classes of these stupid fake gurus online. They're all bullshit. The thing what you can expect 4%, 5% yearly from these portfolios. So considering that, if you see that you are making 4.4 lakh rupees on a capital of 10 lakh rupees, it is coming to 44%. This is nowhere you can say that sir, it's unrealistic. Earning on a well diversified, well researched stock 15% yearly on 5 year. I'm not talking every year they will give you, it will give you 15%. Maybe 1 year it will give you minus 8%, minus 10%. But if I'm talking 5 year average, this much generally Nifty has delivered, and we are talking about some good stocks which can deliver better than that. But let's take 15%, you can get 44%, even that. So that's 1.21. Now some people can say, sir, possibly it's possible that I will receive only 12%. Yeah, it's possible. Always is not, you are not going to receive. But 12% you will receive, otherwise people go for FDs. Suppose even I reduce this 12%, you see, still you are receiving 29%. And with this rate, if I say 29%, your money can be doubled in 2.5 years. Every 2.5 years, your money can double. 44% may be rare, but 12% is very, very realistic, very conservative, right? So, what else you want? Why you want to go for FNO? Why you want to go for trading, do reading charts and this research and that? And understand this is a long-term investment, so you don't have to do changes every month. Max to max, in my cases, I do a review every quarter. Sometime for years, I don't change any stocks, and just like that. In certain situation, maybe I have to sell some stocks, buy some other performing stocks if market changes that way. So definitely in upcoming video, I will talk about this in detail, how basically you have to conduct research, how you have to find good stocks. And only I generally find stocks which are big companies, settled companies, large cap, max to max, mid cap. I don't go below that. I never touch short like small cap and all, or penny stocks. You can't touch it because there's a restriction here. Now already I told you, if you just watch here, there's certain restriction on this. Don't consider this strategy if you have a like a time period of less than 3 years. Second thing, This is the average return. Don't expect that every year you're going to this and you can live on that. It's not a salary that come every month or every year and you can live on that. This is an investment. It's possible that all 4 year you can get negative returns, and fifth year the market can deliver 70%, 80% return. It's possible, but looking at the market, because always we have to see the background or the past to predict the future. Generally stock market has to deliver this much, because otherwise it become unattractive. Now there can be Japanese angle also when market will not go for 10 years, but that depends that whether you are a positive thinker or negative thinker, what you think about India. Most of people are think positive about it, at least for next 10-15 years. So if you go with that story, it's very much feasible that every 2.5 years you can double your capital, double your investment. Now, I have already calculated some calculation like what will be the doubling rate and all. Now, this is something I told you as a calculation. If you have any question on this calculation, I know some people definitely going to ask some scathing question. I'm not ready for that, but I will answer if it is uh, like it's asked in a little bit respected manner. But most of cases, why I'm telling this, I'm doing this already. It was already available all the time. Never people looked at this because MTF was not a important for brokers. Now it is becoming important because FNO is going away. So you can definitely consider this way to grow your wealth, not the wealth. Now, if you consider this, there is two important things here: finding a broker which can give you a good return, good interest rate, and second, finding stocks which can deliver above average. I'm not saying that you have to find multi-bagger. No, there is no concept of multi-bagger. I'm just saying you have to find some stocks, 10, 15 stocks, which can deliver above average return. And there is multiple way you can find that, like sector shifting and all. I will tell you in upcoming video if I get a good response of this. Definitely I will make it, because I want to share this with most of people, because I know a lot of youngsters. Look, a lot of people are struggling because they want to make money, they want to retire early, they want to enjoy their passion, they want to travel around the world. But the thing is, instead of making money, they're losing money doing this all this bullshit thing which is called trading and whatever you call it, right? Strategy and this thing. So that's why this is going to help. Now let me show you some more important point about this. Now already I told you the benefit, like it's long term, there is a leverage available in that. And leverage is not bad if you're using for good purpose. Leverage is bad if you're using for bad purpose, right? Always most of the big business, they use leverage by taking loan. But that means not that every business goes down or they become bankrupt. Even Ambanis have a lot of loan on them. The only thing, if you use leverage for right thing, it will definitely deliver the multiple return on this. And that's the core idea of this whole strategy, which I call mastering MTF. Now let's talk about some benefits. Very important to talk about benefit, because I will also do some comparison in some other video why it is much better in all sense. First thing, it's a long term bet, no trading, no speculation. It's long term. Only thing I'm using leverage in my favor, especially in the economy which is going through its sunshine time period. Second, if you talk about leverage, yes, it's play in cost leverage. That means it's return you generate on your investment less interest. These two factor is basically playing. It's a mathematics, and I'm just getting more return because I'm using multiple factor of my capital by taking a loan which is much less than what I can expect as a return. Now, third thing is stress free. There's no charting, no timing, no goose chasing. Like I have seen people who have really screwed up their life, they but just for calling themselves a trader. Now, how much profitable, only God knows. But I have seen people who have really screwed up all the time. They just every morning they get up and do this charting and all. Let me tell you one thing very, I will honestly. See, if it's so easy to track market by using some chart or something like that, I think algos are much better than you. Then the people who are running algos might have become multi-billionaire. Now, some people may say, sir, big companies will always make a lot of money, but algos are not only factor. I will tell you in later things how they have people inside most of the companies who pass some information, even it's illegal, unethical, but some big companies they employ these tactics. So algo is not the only way they make money. There is lots of other way they make money. That's why if you are not a that, if you don't have such a big company, don't have so much resources, even you are sitting with the algo, you will always make losses. This is a chapter, this is a topic for some other video. But here there's nothing like that. It's a long-term investment. Once you make a good portfolio, you can sit on that portfolio for years without doing any changes. Most of time you don't have to do changes. So that means there is no stress. There is not every morning you have to wake up and do research and find news and everything. You just have to find good portfolio, stick to it. That's all. Third important part, large cap. Mostly these companies like brokers, they allow only investment from a set of stocks, like 700 stock or 800 stocks or 1000 stocks. They have a list of stocks. Those stocks can only be bought from that, right? You cannot buy any stock by taking a loan. This is for brokers on safety because they are basically funding your investment. So the good part is that you don't sway away, you don't go into some risky investment. So it's a built-in safety for you. Now last thing is the taxation part. I love this part, I really love this part, and let me explain you why. So most of cases, if you do trading FNO or something, it's called a business. So trading in FNO, if it's not a speculation, then it is called a business income. Business income is taxed as per your tax rate. And suppose you are earning a slightly better salary, you are falling in 30% category. So whatever first thing, there is hardly you get a profit, year on year profit, right? I challenge the people that you show me 3 years of continuous profit from your trading. You are calling yourself big shot. Nobody showed up. I was ready to put my own money. Nobody showed up. But again, suppose you are making profit, 30% of that is taken away by government after paying all charges, taxes, STT, everything. Here, the tax rate is only 12.5% because it's a long-term capital. Now, there is another way which I love. Like suppose you are professional like me. I'm a CA, for example. I'm getting some kind of professional fees. So this is my business income. I can show that as a business income also, right? What is the benefit? Like suppose I'm one thing I just want to tell you that if you're taking loan, the broker is going to charge that interest every month. Some broker will charge interest every week, or some broker will charge every day. So what happen yearly, if you don't sell any stocks, you don't have any profit, but you have losses. Not losses, basically you have your interest expenses. Now if you it's up to you whether you want to show this as a business or as a long term capital investment. In income tax both are possible. Suppose I show as a business, I am a long term investor, but I am doing this as a trading, and these all stocks are my stock in trade. So in that case, whatever losses are happening as a interest arising from interest payment, because I'm paying interest every year, but I will book profit whenever I will book profit. That time only my profit will come, right? And if I'm long term investor, I'm not definitely not going to book profit every year. I will book profit whenever there is a profit, and or whenever there is a need for me to book profit. So just consider this very simple thing. My normal income, like income from my CA profession, there is a profit and there is a loss from my this business. This is also business. I can treat as a business. I can adjust losses, interest, whatever I'm losing as an interest payment. I can loss. I can adjust and I can reduce my taxes. It's a master stroke, and nobody can question on this because this can be done. So these are some benefit which you definitely have to consider. Now let's come to the implementation part. If you really want to do implementation, how to do? As I told you, this is going to be a big video, but really just stay with me. You will thank me that you really give a very great idea without any payment and without any like to open Dmat account or something. It's just I want to share with you. Now, the playbook of MTF is very simple. So there are two factors, as I told you. You have to find a broker first thing which pays you, which gives you low interest rate. Lesser is best. So you have to find out a broker which gives you 6%, 7%, which is not possible now, but 10% you will get it. I given the name of broker also. You can search on Google also. So different broker are charging different interest rate. The lower is better. Second thing you have to do is you have to beat Nifty average return. So whatever Nifty is offering, you have to find some stocks, some portfolio you have to build up which can beat Nifty. Nifty is a standmark, like is a kind of base, right? These are best 50 stocks. Now understand this in Nifty, these are big companies. Generally big companies are safer, but they give lesser return. If I can find out something between that like a safer companies but give slightly better return, like I can generate 15%, I can really get 44%, which I already show you as a calculation. Now in broker part, you have to find three important things from broker. First thing, easy to operate. That means placing MTF order should be very easy. So you have to check that broker. Some broker have really like you have to first book the order, and by 7 p.m. or 10 p.m. you have to pledge those stacks. So what is pledging and all, I will also make some subsequent videos and I will explain you all these things in detail. right? So maybe upcoming videos I will definitely explain. So first thing you have to see, the broker should have lower interest rate, but again, it has to be easy to operate. It should not have a lot of problems and apps stucking out or like something like that. So you have to check it that slowly start. Don't like put all the money all together. You can start with 2 lakh rupees also, and you can take 8 lakh rupees loan. With 10 lakh also you can start this testing phase. Second, long-term approach. You have to hold this position. This only works that way. So I always say that I can give you 1,000 names of the people who really made money by being a long-term investor. Give me like 100 names of the people who are trader and who really rich. There can be lots of miss like reporting news because everybody happy cheating small investor like us, milking us in different way, but nobody helps us. But let me tell you, if there is only way to make money in stock market, there's a long term. Now this margin part makes it more attractive. That's the only difference. You have to also check the other charges. Like it's not like they are offering low interest rate and then there are a lot of a truckload of charges by different names. So always check all the charges like pledging, unpledging, and late interest, and whatever charges they are charging. Just read their documents properly so that you don't get a surprises later. If you come to the second important part, that is a stock selection of stock, then there's two important things you have to see. Moat. Something extra should be there in country company. Something different it is doing. That is something you have to do, and how it is important for upcoming future. How it is fitting in the future story. That's the only thing you have to see. It's not that difficult, right? You know from Warren Buffett. But yeah, finding it's not so easy also. But if you read the news and find something, I will also in future videos I will talk about some strategy to find out more in the companies, financially also, non-financially also. It's a science and art in itself. So you have to find a company which is slightly have some valuation, and the most important part is good price. The good price is not always available, but when you are available, you have to take it. Now this is the best time because stock market has corrected. Some good stock has corrected almost 20%. What can be best time to start this kind of strategy? Even they retain their original price, you are sitting on 20% profit. These two important things you have to just consider. Now, let me compare in brief. I will make a detailed video on that because I know a lot of people will criticize me for a lot of things. So it's not possible why Ambani's are not doing, why this is not doing. I don't know about Ambani, but I know that it generally works because it's very like simple strategy, right? This math. There's nothing I'm telling you secret or something like that. Let's do some quick calculation about. So if you really want to make money in investment or trading or something, what is the option available with you? So you can do trading in FNO, you can do intraday, speculation, you can do plain investment. So what is the different thing? I'll start with third number. That is, if you just do plain investing, what is happen? First thing is a slow growth. It's not a bad thing, but if you're just going to use your money, you will get return only on your money, no leverage. Second, the portfolio going to be more concentrated. So suppose if you have 10 lakh rupees and you really want to do some investment in good stocks, so at least 1 lakh rupees has to be there will be more concentration. Instead of that, if I get 50 lakh rupees, I can invest in 50 stocks. So the concentration part, the risk of concentration can be avoided using other money, using the funding. Okay. The third part is it is a bit boring. Now understand, if something doesn't happen every quarter, every month, I'm not saying we have to trade, but when you take slightly bigger capital, you get slightly bigger return, and now you are interested. Suppose you have very small capital and small return, sometimes no return, you will not be interested. It's very important. Even in long-term cases, you are focused. You don't have to see your portfolio daily, but you have to be at least knowing what is happening in the market, the news and all. So maybe I will start something on that also. But you have to be interested in your investment. That's only you're going to make money. That's the most important part. Long-term investment become boring after a certain point. You stop looking at that, and sometimes you don't know that your portfolio itself is going to drain. And of course, I told you that there's no leverage benefit, so no growth. There's some differences. There is other differences also, but I will talk in some other video in detail. Already I'm going for 30 minutes. Now let's talk about the intraday and speculation. I don't want to talk about a lot of thing about it. People claim to give you a moon and you don't get even a moon dust. That's what is my experience with lots of these strategies trade. Now everybody, it's so much promoted. If I ask you the simple example you can draw, the worst is the product, the best is this marketing strategy. That's how it is sold. You can take a simple example of insurance. So if you talk about the plain insurance, the term insurance is the best product for coverage. But if you see What basically is promoted? It is ULIP, unit link insurance plan. So here is the same thing. In intraday everybody makes money, the government, the broker, your trade guru, everything, everybody makes money except you. That's why it is get promoted, that's why it is so much focus, right? So first thing, the profit intraday, you can't expect big profit. They hardly very small profit, and now you understand the cost, STT, GST, everything has increased on that. So if you consider the cost and expenses and taxes already increased, the profit will be even lower. Second important part is the charges. You know, the charges has been so much increase, and now broker will also increase charges because their other revenue model is shrinking. So they have to recover their profit from somewhere, and it will be from definitely these charges. Risk. Now understand, the shorter the period, the more the risk. So people say that okay, short period you can predict. I'm saying the time is the biggest enemy and biggest friend for the long term investor. Only thing, they have to decide whether they work for time or they work against the time. In short term, the time is against you. You will just have one day, so it's more likely you're going to lose out against the big investors who are sitting with big money, but they don't have that much constraint as you have. So there's a problem. Second thing is capital. As the profit is very small, so you have to bring big capital so that even the small profit makes sense. If you don't have big capital, the intraday will not make sense anyway. Now, so the biggest thing is the stress, timing of entry and exit. You just have to sit and stick with that. So with that, you cannot do your profession or anything else. You have to lose everything to gain this. And as the SEBI has said, 90% people lose out in that. So why to take stress, put your time, put your expertise, whatever you, just to make losses? That's the intraday. There's a whole story. Then you're talking about trading FNO. The trading again, the now the capital has been increased by Nifty by SEBI. So first thing, the weekly options will not be available for Bank Nifty and most of things which people used to do earlier. Second important thing, the lot size has been tripled. So now you will require three times more capital to trade in FNO. Three times capital means less liquidity. Less liquidity means there's more chances that you will get stuck if you are option buyer. So option buyer definitely have to suffer. After 20 November, this new policy will be implemented. Now, the second thing, important thing, if you consider the research and stress, you know how much stress is there. Second thing, if you understand, stress is also there because it is the capital and the risk is much more than intraday, because here you have to deal in lots, not in number of stocks. So lots means you lose more, you gain more. So stress level you can understand. And again, same like intraday, you can't do anything with the FNO. So you're dealing in trading FNO, especially in monthly or like earlier people used to do in weekly. You have to sit in front of computer all the time, and unnecessarily you get into stress without making any money. That's, I'm not saying, that SEBI is saying. Profitability is very questionable. People can claim anything, but what, as a professional, I found that most of them are faking it, just to, because most of them are making money from commission and not from this thing. So that, of course, you are, most of people are wise, they know already, there's a lot of awareness about that. There's all this fake profit and loss account and showing this big dreams. It's all fake thing just to trap you. That's all. Expenses. It's very expensive, even more expensive than intraday, because now expenses are like, it's almost almost double up. So there's a also important point, and taxation. I already told you this. Even if you make some profit, 30% or 35% government will take away from you, because this is considered as a tax as a business income, right? So it's not a long-term capital where you will end up paying 12% or 12.5%. It's 30% taxable. So making all these things is definitely somewhere you have to think really it makes sense, taking so much risk, bringing so much capital, and end up paying a lot of taxes on that. Instead of that, if you consider this MTF or long-term investment, you generally don't do a lot of buying and selling. So paying brokerage charges, STT is limited, very limited. Second important part, the less you trade, the less cost you incurred. Long term, you stay more, there is chances that you will get appreciation without doing anything. And the best part, you can focus where you should focus. That's your career. Friends, one thing I don't want to be lecturing here. Most of you are maybe older than me, or maybe wise enough to understand this. Initial year is your career which build your wealth. Investment only multiply it, but to multiply anything you should have one. Like, if you have one, then only you can multiply with 5 or 6 times. If you have zero, you multiply with anything, it is going to be zero. So your own career is always that one which stand first. So focus on that, it will delivers you most of things. The investment is a way to multiply that wealth which your profession or your job creates. Now I know some question, lot of question will come. I have taken some question, and if you have more question, definitely you can ask in comment section. Just understand, I'm not selling any product here, not selling anything. I'm not asking any fees for training or something. I'm not promising any return here. It's just for your knowledge. So be slightly respectful for the person who is putting his time to maybe give you some kind of idea, which is you are free to use or not. But here are some question you definitely going to ask. First question: why Ambani don't use it? Now understand, Ambani is have a lot of money. For enticing Ambani, any broker should have at least 10 lakh crore rupees of loan giving to them. I don't think at this point any broker has that much capacity except Zerodha. Zerodha has still not started MTF, but they are already testing. They will launch it, and I don't know after that they will like to give loans to Ambani. So Ambani don't need; they already have in this game indirectly. So forget about them. You are not Reliance, and they are not you. Second question: why broker land? Why they don't invest themselves? Now you have to, for that you have to read the regulation which govern the brokers. So in most of cases they have to maintain certain liquid funds with them, because see, in India the stock exchange directly doesn't deal with us. They deal with broker, and broker deal with us. So if we do some mistake, like we don't pay some funds, or we do some kind of like where we don't have funds or something, we short of fund, then whatever loss is going to happen, that NSE or BSE going to recover from brokers. For that, broker have to maintain some cash or some liquidity. What happened now? The broker are allowed that liquidity to give us as a secure loan. Now understand, if they give us a loan, they pledge share in their favor. So they are giving a secured loan. So they don't have risk. On top of that, they are earning some money. So that makes sense for them, right? They have liquidity, they have stock with them, and stocks are liquid. You can sell it anytime, and on top of that, they are earning 7 to 10%, 12%, 18% also. It's a big business for them. In US, if you say, most of brokers are zero brokers, like they don't charge for brokerage, they charge from MTF. Maybe this is the way our brokers also developing slowly. So that's why they can't invest themselves, because they have to keep liquidity, but they can offer us loan. Now some people might have quoted Warren Buffett, that Warren Buffett has said that the leverage is a double-edged sword. Yes, of course it is. But that you have to understand, the sword, it depends on you whether you want that sword to protect yourself or cut yourself. So always it depends where you use that sword. If using the leverage for trading, speculation, intraday, of course, it's not a double-edged sword. It's basically a suicide knife which you have put on your throat. Tomorrow it's going to hurt you. But if you are putting on long-term investment, just you tell me what can go wrong. Now, I can tell you some scenario. Video is already extending, but still I will tell you some scenario. There can be a Japanese scenario where the market is not growing at all, and you will end up paying interest. But the same thing can happen with your house also. So if you just compare, this facility is similar like getting a house, putting this house on a rent, and over the period let it appreciate, and then sell the house, pay that loan, and pocket the difference. It is same. It's not different. So if buying a house is safe, even it doesn't appreciate as much as stock appreciate, you can see the whole like 10, 20, 12 years of or 20 years of past, market always have beaten housing. So if housing is not wrong, it is also not wrong. It is more liquid than housing. Anytime you can exit, you can enter. Second thing, you understand, sometimes you don't have to hold a stock for very long. Sometimes it can deliver early also, so you can save interest also. Lots of things are there. But yes, that's right statement, but you cannot use that statement in this context. It's a long-term investment. Now, fourth question already I said, that what happens if the market gives return for all 5 years? It is a possibility. Nothing is impossible in stock market. But then it depends what you believe, because always you do something when you believe something good about it. Do you believe all 5 years India is going to give the negative returns with all this data, positivity, development, and Trump in the office now? So you have to think that way. If you think, and always I see like people who are bullish on the stock market, generally they make more profit than people who are bearish on the market. So bulls in long term, they make more money. So we have to think that way. And if you have any further question, definitely you can ask me. Already this video is very, very long, and thank you for giving me this much time. And if you have any question related to implementation, any other question, please ask me. I will be available. And in future, I will make more video on this MTF to help you to understand how you can also implement. Maybe you can start very slow
a small portfolio, and then slowly, if you get a confidence over the period, you can increase it. That's all in this video. Thank you. Have a nice day.